for any primary producers out there, it's really important now that the instant asset write-off has finished that you keep in mind any equipment that you trade in is likely to have been fully written off or depreciated in the past. And as things tighten up from a point of view of the livestock prices and just the general climatic conditions with your farm, the last thing you need to do is to be receiving an extra tax bill come end of year. So I've got a few tips to minimise your tax to help out if, for example, you may have traded in a bit of equipment which is likely to cause a tax bill. How you can offset this is in a few different ways as a primary producer. The first thing you can look to do is anything to do with water conveyancing or conservation, so think pumps, piping, irrigation, that type of thing, is fully deductible in the year that you make the expenditure. So travelling irrigators, fully deductible. The second area you can look at is fencing on a farm. So whether it's internal or the external fences, these are going to be fully deductible under the accelerated depreciation rules that apply. The third thing that could assist you is in regards to the fodder storage assets. Now, this can be things like silos, grain bins, liquid feed storage tanks, above ground grain bunkers, could be hay sheds or grain storage sheds, just to name a few. So there's a lot of options there. Some of these assets, will take quite a while to acquire and construct. Being a shed probably is something you need to look at sort of 6 to 12 months in advance. Other things you can obviously pick up closer to the 30th of June and still have on hand to get the deduction. Now, the final note I've got written down here, I guess with any of these things, is what you need in place for your farm is a bit of a capital plan as to what you need for your farm in the way of plant and equipment and other assets, and actually have it worked out as to when you're going to purchase these assets, so that you can match it up with the available cash flows you might have on the farm, and you might have a 5 to 10 year plan in place for this.